pretty sure the feed is live at this point. I'm starting to see some of the comments trickle in here from people that were already sitting in the room before we got this thing kicked off. The reason I'm doing this tonight is because I'm actually just testing out some new software that I installed, and I'm also testing out a new microphone boom. So I'm hoping you all can hear me. If not, just let me know um, in the comments section, because that's one of the main things I need to accomplish, is to make sure that my setup's working for future interviews. Okay, yeah, I see a comment there that it just came in. One of the things I can do with this software, which is pretty neat, is I can pull comments that people are posting and drop them into the video. So let me try doing this right now. So here's one of the comments, and this comment is from Shing. He asks, Mark Cuban, TIP podcast, when? I don't think that's going to happen, especially after my Twitter war with Mark a few months ago. So I would love to have him on the show. I'm definitely a fan of Mark's, but I think that he's missing a few key aspects when it comes to Bitcoin in particular. But anyway, were you guys able to see the comment that I posted into the video? Did that work whenever I did that? Hopefully it did. You could see his the person who posted it. Could you guys see all that? And Jerry, thanks for the comment there. Jeremy Lamb posted that sounds perfect. Awesome. So I got a brand new, you can't see it in the screen, but I bought a brand new mic boom and have it set up. So hopefully my sound is way better. And I see Chabulous, you wrote, yeah. Or was your yeah in reference to the comment that you could see the comment on the video? I'm assuming it is. Okay, perfect. Thank you, Eric. That's awesome. Okay, so I promised I'd answer a couple questions because the software is working, which is what I wanted to accomplish. So thank you guys very much for helping me troubleshoot this. Okay, let's see what we got here. Is the Mayer multiple 2.4 still a relevant key threat? Okay, here, I'll throw this one in there. So this question is about the Mayer multiple 2.4 still a relevant key threshold. The thing with Bitcoin in particular, with the Mayer multiple, is it's very volatile. So when you plot, when I took the statistics on the price compared to the 200-day moving average, and I plotted it out over the entire, every single day for the last 10 years, your range of that multiple was massive as far as the left and right limit of that. So because historically the Bitcoin price has done such massive moves, when we went back and we did a threshold of like, okay, at what point is the threshold of when you should always be buying and when should you not be buying? 2.4 and I did this analysis back in 2017. So there's been a lot more price action since 2017. So I'd imagine the 2.4 is probably a little bit lower than it was back then, just because you've had a lot of down movement in the market since that analysis was done. But I would imagine it's still above like 2.0. I'd have to go back and look at that to see if that's changed much. But I can tell you right now where the price is at. It's a screaming buy at the current price. Let's see here. Here's a fun question. Why would anybody sell Bitcoin before 2028? Good question. For anybody who understands it, I don't think that they're going to be doing that. Let's see here. And I would tell you, speculators are going to do that. They're just trying to, they think that they can outsmart the moves. I would tell you that's pretty hard to do. You just got to look at it from a long term. Oh, this one's fun. Let's talk Tesla. I don't really have too many opinions. I think Tesla's doing some amazing things on the technology front. I think that they are absolutely pressing the limits of anything that any other car company is doing. My problem with it is the financials on it are very scary. Um, but there's a lot of buyers. Even if he dilutes the shares a ton, I think there would still be a lot of buyers. Now, as far as being a long term holder, I just wouldn't want to see what that would look like. I think that the price is just, it's going to be pretty volatile to say the least, and that's why I'm just staying away from it, because so much of it depends on what he's going to tweet next. It's just too hard for me to try to own, to be honest with you. So I just stay away from it. But I love their cars are gorgeous. I think when you're sitting inside of one of those cars, they're just incredible. I have concerns about his production line, whether it's. I also have concerns with their customer service long term. Like in another 3 years, I'm kind of curious where they're going to be at. So that's just another reason why. So Jeff Booth, I saw this, love this comment, Dylan. I have not finished the book yet. I'm getting there, but I can tell you a lot of the things that he's talking about in that book are things that I have thought for many years, probably since 2015, 2016 timeframe. And for me, it's so refreshing to see it all encapsulated in such a clear manner. And let me tell you, he's beyond eloquent, and he's great at taking really complex ideas and simplifying them in manners that I think the general public can digest. I completely agree with his thesis in the book, which is that you're going to have deflation in order for all this to get fixed. And whenever I say deflate, you're going to have some type of currency that's deflationary versus, or even that holds steady in order to self-right the ship that we're currently all on. This inflationary policy stuff is not going to work moving forward. If they keep doing more of the same, this is going to get pretty scary. You're going to have a lot of social unrest, I think, if they continue to implement the policies that have worked for the last 80 years. We could get into all those dates and why I'm saying those time frames, but okay, here. We did do okay. So here, I'm sorry, I'm answering it without putting it into the queue here. Have you ever thought of covering Jim Simons in a TIP podcast? So we have. We covered the book. Oh my gosh, I can't even remember the name of the book, and I've read it. But Jim Simons and the writer for that book did a great job from the Wall Street Journal. We had him on our podcast probably, I don't know, 20 episodes ago. But he's a really interesting person. His performance is nuts, better than pretty much anybody I've ever studied. I want to say his performance was like 40% annually or something crazy, and he did this for multiple decades. So yeah, good luck repeating that. But he's a total quant. His longest duration holding period was like 2 days, and he's literally a mathematical genius. So yeah, okay, I see your comment there. Never mind, missed that episode. Yeah, check out the episode. It was a good discussion. But I think as far as people trying to implement that approach to investing, good luck. Okay, I like this question here. What do you think of putting money in GLD versus physical gold? Well, that's a good question, because we're starting to see some separation there, aren't we? I'm a little concerned about all that. I think anybody who's holding GLD right now has to be asking themselves, is the separation in the price going to continue to persist? Now, you're seeing some people say, well, because of the COVID-19, they can't take physical delivery, and that's what's causing the separation in the price. I don't know enough about it to say one way or the other, but I can tell you, if you literally have physical gold bars in your hands, you're going to do great. If you've got paper gold, who knows? We'll find out, won't we? Let's see here. Thoughts on Exxon and Chevron. So I don't know if you've heard my comments on some of the podcasts lately, but I think that there's plenty more pain to be had in the oil sector, just because your demand is nowhere in sight. and your supply, I mean, they're just still pumping this stuff out, like relative to the demand signal. I mean, it's ridiculous. So I think the prices have a lot more pain to go. I think that the Saudis and the Russians are in no rush to do a deal whatsoever. This is their big opportunity to just bludgeon the frackers here in North America, and I mean bludgeon them. So that they're going to play nice on the political front. You know, they're going to take the phone calls, they're going to have the discussions, but when it comes down to it, trust me, they are in no way, shape, or form anxious to have the prices go up at this point, because they're the lowest cost producer. The frackers aren't. They're their competition. They're going to push them out, and they are not going to let up. So I think that you're going to see the price. I mean, my anticipation is that you're going to see the prices persist like this for another, I don't know, another quarter at least. But I think what's going to really get fascinating is that I think the price per barrel is going to shoot to the moon on the other side of this whenever demand does come back online. And you have all these producers that, especially the frackers, that are, they're having to pull back their manufacturing because they're running out of capacity, storage capacity. So when that demand signal comes back online, now it's not going to be nearly as strong as the demand signal that we saw before before any of this happened, because you got all these people that lost their jobs, you got all that kind of stuff that's going to play out. So you're not going to nearly have the same level of demand as we had before all this started, but the demand is going to be strong enough that it's going to make the price pop. And I think it's going to have some interesting results. I think $50 is absolutely in the cards. And I think higher than $50 wouldn't surprise me in the least bit. So where that all gets interesting, and the timeline on this is really tricky right now, because we don't know how long a lot of the people working from home is going to last, or the quarantine portion of this is going to last. But the critical milestone that you got to watch for that is whenever you start to see relief in the hospitals. That's whenever they're going to quickly say, everyone get back to work. So when that happens, you're going to see the demand signal get turned back on. You're going to see the price of oil start going up. You're going to see all the speculators step in, and the speculators are the ones that are going to make it run way past whatever that equilibrium price is. And so I think when you see that play out, where it's going to get kind of fascinating is inflation impacts. So if you go from, let's just say the price per barrel is at 20 or it's at 10 or whatever it settles in at, if you go from $10 up to $20, you go up to $10 to $30, the inflation numbers that you're looking at are just going to, and this isn't just happening in oil, this is happening in all commodities across the globe, because you've had this massive supply demand shock. So when you start pumping in these inflationary numbers that are insane because they're based on the delta of where they came from, now all of a sudden your fixed income market, your bonds are priced first by the risk of repayment, and then where the starting point is your inflation number, right? So if you got inflation of 2% or 3%, that's your starting point, and then the risk of return of principal is then a premium above that inflation rate. So if we get these crazy inflation rates, which I fully expect to happen by the end of the year, like your fixed income market's going to blow up, just absolutely blow up. So then you got to talk about the equity piece to that. So your discount rates for equities are based off of the fixed income market. So if fixed income is shooting way up, which there's no way the government's going to allow it to shoot up, you're just going to have a ton of selling, and then you're going to have the government stepping in with QE in order to buy all that. But as far as the way the market's going to be viewing it, they're going to be viewing that as inflation. They're going to be viewing that as a premium or a discount rate that's going to be priced into the equity market. And I think that's where you're going to have a really, really difficult time in the equity market long term, is because those discount rates are going to be sky high, or the synthetic discount rates are going to be sky high. So hopefully some of that. And your question was about Chevron and Exxon, or so I'm not a big fan at the moment. I think even when the commodity price comes up, you're going to have such weaker demand for their top line, because their top line is based off of the the margin that they're getting on the commodity itself, and then the volume of sales. Those two numbers combined are what's giving you the top line for Chevron and Exxon. So if one of those is going up, call it the margin, when the price comes back online is going up, but your demand in your buying is down, I don't necessarily know that you're going to see this huge recovery on the top line of both of their income statements. So that's where I would be a little hesitant to say. I don't think that those companies are going to perform nearly as well as the underlying commodity would. All right. Let's see what else we got here. Okay. Uh, Here we go. Okay. Do you believe staying in cash is best for now? Thank you for all you do. All right. Thanks. This is such a hard question to answer because it depends so much on the person. It depends on what the position is. So let me just give you an example of why this is so hard to answer. So let's say you bought a company 10 years ago and you got massive capital gains on that company, right? The last thing you probably need to be doing, like at this point, you might have dividends that are paying you 20% on the principal that you initially put into that position. You see this on Buffett's balance sheet. This is why he doesn't sell his positions. These long term, like Coca Cola, he's holding it. Well, the dividend looks measly, but you got to think about the dividend compared to the principal that he originally paid to gain a glimpse of why he does not sell it. So you got to understand what that aspect is, and this is just one tiny piece of whether you should be in complete cash. So for me, I had moved my. I'm just talking about me personally. I don't. I have Bitcoin and cash in my account right now, right? And a lot of people are probably like, that's nuts. Well, I had changed quite a few positions through the last 10 years. And I know that a lot of value investors, a lot of Buffett investors be like, well, why did you do that? And maybe it was a good idea, maybe it was a bad idea. I don't know what to tell you. But that's where I was at. And so I didn't have that issue like I was describing previously with the capital gains piece, like Buffett has on some of his balance sheet and income statement for his company. But it really depends on the person. It depends on what your outlook is. It really depends on what your conviction is. If you have no conviction because you maybe don't understand how I'm thinking about what's going to happen in the market, maybe you have a different opinion on what's going to happen in the market, and you have a different expectation, that gives you completely different conviction for the investments that you have. And if you don't have conviction for what trades you have, you will sell them when they move in the wrong direction or they move in the opposite direction of what you were expecting them to do. So I think that's such an important point that so many investors miss is they'll put on a trade because somebody else is doing it. They don't understand they don't understand why that person put on that position. And as a result, they sell when it's not time to sell. Like a lot of people are seeing that I'm a big fan of Bitcoin right now. So maybe they don't understand it at all. I'd say most people don't understand it because it's very hard to wrap your head around all of it. So they then buy that and they have no conviction, and then they sell it as soon as it goes down 15% because they're scared to death. So convictions are a really important part of some of that. All right. All right. Let's see what we got here. Sakura, Preston, how long in months until the current credit spreads we're seeing end up causing corporate Chapter 7 type trauma because you can't raise enough? Boy, I can't. I don't know. I really have no idea. I think it's going to be quicker than what we've seen historically, based on. And I don't mean to laugh at the circumstances. That's just a really simple answer to a really hard question. Whatever we've seen historically for downtrends, I would just say whatever that is, it's going to be way faster this time around, just because this thing is like nothing. I mean, nothing we have ever seen. This is crazy what we're seeing right now. This is off the charts, insane what we are seeing right now. Okay. Uh, uh, uh. Okay. Are you planning on adding any more free calculators on the Investors Podcast website? I have a bunch of free calculators on buffettsbooks.com. If I don't really talk about that website much anymore, but it's still there. It's completely free, and there's a ton of calculators on there. We do have a paid tool that makes things way easier for people. It is the tool that I dreamt of having someday, and now that I have a team of programmers that work for me, I was able to have them build it out. And it's very nice, but I know you're asking for something that's free. I would tell you go to the buffettsbooks.com website and check that out. Let's see here. Can I don't mean this to like show off like a paid tool, but I do want to show you something that we have just recently built that I'm super excited about, just to kind of demo something. So here, I'll pull it up. I think I have it on this browser here. Let me see if I can share my screen. Okay. Oh, okay. You're seeing me through a window. Let's see what we got here. Okay. Yes. So I think you guys can see my screen. So when you go into this fundamentals page, this is really cool stuff. I'm super excited about this. So let's just take like Amazon. Okay. And we'll pull this up into our fundamental tools. And what this is doing is it's helping people be able to determine an intrinsic value. So what's really neat on the tool, so it's showing you a simple, like, this is not a lot of analysis. It's just like using some historical numbers based on the current price to earnings. Then it's showing you, because when you're investing, the big piece that you want to do is you want to look at your opportunity costs. So your opportunity cost is the S&P 500 right now is yielding 4%, 10-year treasuries at 0.62, and then this company is potentially in that price range. If you want to go into a more detailed analysis of what the company is, what you think the intrinsic value of the company is, you can click here. And then what it does is it shows you the historical free cash flow right here for the past 10 years. And then what you're doing is you're coming up with an estimate of what you think the future free cash flows will be for the company. And this is based on your analysis. So if you think the future free cash flows for Amazon would be 7%, for your top band, for your most likely band, let's just say it's 5%, and for the lower band, we'll say it's 3% or 2%, right? And then I can even assign a likelihood. Let's say I think the middle band is the most likely. I could put in a 70% likelihood, and then I'd have to adjust these to 15% and 15% because it's got to add up to 100. And then what it does is it goes in and it automatically figures out, based on the current market price, it'll automatically figure out your IRR, or basically your intrinsic value. What percent would you get annually by owning this into the future? And it's coming up with 1.68% for this company based on that projection of future free cash flows. So really cool tool. I'm obviously gloating and a little excited to show it off, to be honest with you, because it's just so simple and so fast to use, and the fact that it plots it all for you is pretty exciting for me. But anyway, I'll get back to the questions here. Let me see if I can get my screen back. There we go. Okay. And the tool there was TIP Finance. That's on our Investors Podcast webpage. Okay, so this is a hard question. Preston, appreciate all you do for the community. Are there any pointers you're looking at when you expect inflation to spike? So I don't know, man. This is getting wild. I think you could already come out and say that the policies that you're seeing, the $6 trillion on a whim just in the U.S., all the other countries that are doing similar policies, it's a competition to devalue at this point. That's what people have to wrap their heads around. It's like all these countries are trying to make their currency the weakest to manufacture growth, to manufacture an incentive for investment in those countries in order to perform the labor and to produce products and services. So I think you could say that you're already seeing the balance sheet for these central banks have doubled in the past month. So you could say you're already starting to see it. The but what you haven't seen is it actualized into the economy yet. And I think that's where your question is going, is like, when are we going to actually see this start to take hold? I would argue that where you see quantitative easing show up is you see it show up in asset prices. You don't see it show up in commodity prices. You see it show up in asset prices. So if you started looking at all these stocks in the last, like, especially in the last couple of years, it's just starting to go parabolic. And so by implementing more QE without UBI, just doing more and more QE, you're going to find that that trend will persist. Now, with everybody not working, I don't know if they're going to be able to keep the farce alive. But I mean, that's what you're seeing, is you're seeing it play out. So how it represents itself kind of moving forward is really tricky, because so much of it comes down to the policy and how it gets implemented. The social unrest piece of this, where you're going to start to see, I mean, think about where we're at right now. You got nobody working. I don't want to say nobody, but you got a significant portion of your population that's not working. And so there's gonna be a situation where you're gonna have social unrest, and you're gonna have calls for additional UBI, additional checks every month, maybe checks up to the election, maybe checks through the election. Like, those things are going to manifest themselves in ways that we just have not seen yet. And I think that that's going to be, how long does that play out? I have no idea. I think that it's going to get interesting, though. Okay, this is an important one. So the only ticker that we have on that TIP finance tool is GBTC, and it only works for the momentum piece. It's not like you're going to be able to do an intrinsic value calculation on that tool. Just, I want to answer that because I know there's probably a lot of Bitcoiner people in this feed, so just so people know that. Uh, 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 okay, let's see here. I'm smiling at some of the comments, but I'm not going to answer them. All right, Brad. Preston, huge fan. Your materials helped me so much. Bear case for GLD and Bitcoin. Dollar doesn't need to be tied to anything other than other people say so. I think what you're going to find is you got this quantitative tightening. Quantitative hardening is the phrase as of today that many in the community are using for the event coming up here in May. So I'm going to embrace that. So we have quantitative hardening, also known as the halving event, happening in May. And I think that when you look at how that functions, and you think about the fact that there's going to be half the amount of supply hitting the market, that has an impact on the price. And you'll find some naysayers. In fact, Plan B and myself have talked offline in private, and he likes to beat me over the head by saying, look at that supply that's coming out of the Coinbase into the market every 10 minutes. He's like, it's a pittance compared to the amount of transactions that you see. My opinion is that that's not the ratio that should be used. Is the amount of supply being the flow being put onto the market every 10 minutes compared to the number of transactions. I think the ratio that should be used is the flow of Bitcoin that are put onto the market every 10 minutes, and then a significant portion of that is sold by miners to pay for their electrical bills, compared to the amount of fiat that is coming in versus going out of the market. I think that's the important ratio that people got to look at. And I think when you look at that ratio, you're going to find that the miners that are selling their treasury in order to pay for their electrical expenses makes up a very significant proportion of the fiat that is coming in and coming out net into the market. Okay. So that's why I think that the miners have a very significant portion or influence on the market price at particular times in the 4-year cycle. So as we're going into this quantitative hardening that's happening here in May, that's one of those points where I think that the miners are influencing the price significantly. So I recently had a tweet talking about how Moore's law has a significant impact on the game theory of Bitcoin. So let me talk through this just quickly. So if you were a miner, let's just say you were a miner from 4 years ago and you bought the best rig out there, right? And then you're a miner today and you just purchased a new rig, okay? If you just purchased the new rig today, you're just running circles around the person who purchased one 4 years ago. Your cost to mine relative to the flow that you're receiving, your margins are fat, like super fat, right? Relative to the person who purchased the rig 4 years ago. So as we step into the hardening event in May, now the people who bought their rigs 4 years ago, they've got to shut them down until the price gets higher so that they're back in the money and they have margin to play with, right? Because they just can't continue to consume electricity when they're pulling half as much out of the, I call it out of the ground, but like out of Coinbase. But the person who just purchased their rig that's way in the money, that has fat margins, they keep their rigs running. And guess what? They're the ones that are collecting the lion's share of the Coinbase payment every 10 minutes because they're the ones that can stay online because they have fat margins, okay? So here's where the game theory plays in. So that person has these really fat margins. Well, now the halving happened, and now we're a month into the halving, right? The price is sputtering around, right? Because you have all the miners that pulled their stuff offline, they're selling into that. And so it takes some time for that new flow, which is half as much as it used to be, to start slowly trickling into the market, because now those miners with the really high-end rigs that just purchased them, right? They're only selling a portion of that because they've got fatter margins. Well, they start demanding higher prices because they can hold out for higher prices because they don't have to sell at the rate of the person who's inefficient, who's now completely out of the market. And so what does that do? It pushes the price higher. And if you subscribe to the original idea that I was talking about, that miners control the price at certain points in time, especially when the price is near or at, I call it quote unquote the intrinsic value, or the stock to flow valuation that we all know that's on the chart, which is around $8,000 today. And then after the quantitative hardening, it's at $90,000 or $100,000. Well, guess what? That transition period, as it jumps up to that new intrinsic value, those miners that are taking advantage of Moore's law, that have purchased the new rigs just now, guess what? They can hold out because they got fat margins and they drive the price higher. Then as that price starts to separate and starts to run after that new intrinsic value, guess what else happens? You have speculators that step in hardcore because they literally watch the price go from, call it 8,000 to 14,000 or 18,000, which is minuscule in the grand schemes of where the next move is going, right? But those speculators start stepping in at those prices, and then it really runs. And then those miners, the miners that were out of the market at the previous prices, start turning their rigs back online because now they're profitable again. And then everyone's just trying to chase it, right? And everyone's pushing it higher. So hopefully that helps people understand my comment. It's really hard to say that in whatever characters I have on Twitter. And to be honest with you, it takes so much time to service so many of the comments that you get on Twitter that it's just like, all right, I'm going to put this out there. If people want to munch on it, they can. And whenever I have an opportunity to explain it, in audio or on video like this, then I'll do it. All right. If that made sense, please let me know in the comments, because in my head it makes sense. And I'm just kind of curious if I was able to explain it well for y'all. Let's see here. Okay. Okay, Preston, how to recommend holding BTC in exchange which is more liquid or off exchange? I mean, if you're concerned, I don't necessarily understand what you're getting at with that question. Um, I just personally, whenever I buy Bitcoin, I buy it long term. Like I have no intentions on selling that position. Whenever I buy it, I just, put it in cold storage and just, I don't even think about it again. It's just gone. It's off the market to be never sold again. And there's many more like me. Oh, here, I like this one. Airlines. So as a former Apache pilot, company commander, I was in charge of maintaining all of my aircraft, right, for the company that I led. And here's the one thing I'll tell you about aircraft. They absolutely hate not being flown. They are a disaster when you don't fly them, maintenance wise. And I just cannot imagine for the life of me the amount of capital expenditures that these airlines are going to have when everything comes back online to just get them back up and running in the manner that in the operational tempo that they were flying before. I mean, oh my God. And so then you're going to put this demand on the engine producer. Like I just read something today that GE laid off like 50% of their engine manufacturing out of General Electric. So now you're going to have all these airlines that are going to come back online, right? They're going to try to start flying all these flights again. You're going to have all these people that had to fly somewhere for like 3 months that couldn't, right? So the demand for that is going to be sky high. Then you're going to have maintenance issues in the aviation realm that you just cannot comprehend. It's going to be insane. And so then they're going to be requesting engines. They're going to be requesting all of these parts and pieces that are just going to knock the whole supply chain out of whack. And the people are not going to be there to work because so many of these people, they have that skill set, but as soon as they get laid off, what do? They go look for new jobs. They maybe look for a new line of employment completely. So you're not going to be able to pull that all back online. And I think you're going to have this churn and this struggle. And and think about this, you're going to have so many people right now that are finding out that it's so much easier to work over the computer or over VTC, and that their travel budget was astronomical before all this happened. And it was just a total expense drag on their income statement, that are going to cut their travel budgets immensely. So I think if you're an airline company and, here, I'll pull up my tool again and show you kind of like what the numbers were before. So like, let's talk Delta. Let me get my tool up here, screen share. Okay. So let's go. Oh my gosh. How do I not remember Delta's ticker? Oh man, DLA. The DLA? Yeah, no, Delta Apparel. Help me, somebody. American, let's try that. It's in there. I just got to find the ticker. Derek, give me the ticker for Delta. American Airlines is AA, I'm pretty sure now. I need some help with the tickers here, guys. Oh, I know how I can find it. It's right in here. Jeez, Preston, embarrassing. All right, here we go. Large cap, Delta's at the top of the ticker here. There we go. DAL. Jeez, pathetic. Embarrassing. See, that's why I don't go live. Okay, so here we are on the ticker here. So when I pull this up, what I wanted to show you is, so here was the free cash flows before we had all this happening, right? And you can see the free cash flows are never going to be like real perfect when you're looking at them, because you got capital expenditures that are kind of lumpy, especially in this industry. It's very lumpy. And so what you get is when all this comes back online, my anticipation is that you're not going to see those. And you can see that if you are coming back to these free cash flows, that the numbers are massive, 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 right? So if we adjust these free cash flows to being lower, let's just say it's down to 2,000. It's so funny to see everyone laughing at me. It's good. It's good that you have humility like this at times. All right, so 2,000, and that was me adjusting because the free cash flow that was just reported was not there. It's pushing, 4 billion is what this would be because it's in millions, right? So if I push that down to 2,000, and this is just me cutting the previous free cash flow down significantly to where it's at. Let's just say that, and this defaults to 10%, but let's just say it's 5%, 2%, and we could even say -2% moving into the future. You can see that the future free cash flows could potentially look like this. If you were more pessimistic than me, you could make them go down, right? And so this comes up with an intrinsic value of 13%, which is really strong for Delta. And that's just because prior to this event, you had massive free cash flows. Now, what kind of impairment are they going to have? You'd have to calculate that in there. So you could, if you wanted to just quickly do this just on a whim, I mean, I'm just doing this on the fly. I could adjust this down to 1,000, and then I could make these, let's just say I make this 0, make that 0, make this -5, and then I can make this -7 to just really make it really ugly, right? Just to kind of see what that produces for an intrinsic value. And so that would push the intrinsic value down closer to what the S&P 500 is, because it's around a 4% yield right now. And I mean, I just took a knife to their free cash flows. I really made it look ugly. This is for Delta. So you can see how, and I think that this is probably the point that is more important than those calculations. The point is that you're looking at something where the aperture of future outcomes for these companies is so wide and so unpredictable that it's really hard to say one way or the other. But I can tell you right now, I mean, you saw the screener whenever I pulled up the screener there, what were some of the top picks that the screener's finding based on valuation metrics that Buffett and those guys use. That Delta is probably one of the top 10 things in the filter right now because the previous free cash flows were very high. But some of the factors that I was talking about with respect to aviation and things like that, it's like, that those are going to be real expenses. That's going to be real impairment. That's damage to their balance sheet. They have a very strong balance sheet. But man, I mean, I don't know that they're going to be back to their top lines and their margins that they were pulling out before all this happened, because I think you're going to have a habit change in the travel and expenses coming off of all these companies' income statements moving forward. And that's something that you got to prepare for. I'm definitely not a buyer today. You can see, let me just bring this back up real fast. So on the tool, we have a thing called a momentum tool. And you can see that the momentum status here is red. So when I click on that, it's going to pull up a momentum. And this thing is optimized. The momentum piece of this is optimized for long-term holdings. So you can see that they went through kind of a shaky period there where really kind of flat for the most part, very volatile. But recently, this probably turned on the 26th of, you can see here the date that it turned red, February 24th, this thing turned red. I don't suspect it's going to turn green for quite a while, especially with that much of a downward trend. So this thing's very red. From a valuation, if you're using old numbers, sure, it looks great from an intrinsic value, but I think that the reality of what this is going to look like on the other end is reason to hold off on buying. So really long answer to a simple question, but just kind of to give you some of the ins and outs on what I'm thinking. And the ticker was DAL, was it? Holy moly, how embarrassing. All right, if you were all sitting in front of me, it'd be 10 times more embarrassing. But because it's digital, it's not as embarrassing. At least not for me. But I'm sure many of you were holding your hands over your eyes. Uh, let's take this one. So would you recommend wait at least a year before buying stocks and crypto shares? So for stocks, I'm going nowhere near them anytime soon. Um, I I want to say this: they are printing like crazy, right? So like I have no interest in stocks right now, just none, right? And I love stocks. I could talk stocks all day long. As you can see, I pull up these tools and I'm playing around with it, right? I love it. But this thing is just too manipulated is the word that I need to use. And I keep seeing SQ, so Square is something that I'll talk next. Um, so I have concerns with taking a position because so much of it is dependent on what the policy is, right? If they continue to do QE, and they're pumping all this money, all this cash right straight into the top via the bond market, and then they're just turning around, and then you also had share buybacks that are really a bad narrative these days. Um, I don't know how they're going to implement the policy. I'm sure this first $6 trillion that's rolling out, it looks like is 4 trillion is going to go to the business sector, 2 trillion or ish is going to go to other parts that are more UBI like. But in my opinion, that's just the tip of the iceberg. So I think that they're going to. I mean, by the end of the year, if we were at 10 trillion, 15 trillion as far as aid, like that wouldn't surprise me in the least bit. So where does that get distributed? Does that get distributed to pump these prices and to keep everyone's net worth stable that are holding securities? I don't know. I have no idea. So it's so hard to answer that question right now. I'm just staying the hell away from it for the time being because no one is working. We're seeing the unemployment number was 6 million people in 2 weeks. It went from 3 million to 6 million. Like these numbers are crazy. Like the second, third, fourth, fifth order effects are going to pop out of this on the back end are just going to be ungodly. I just can't even imagine what they'll look like. So, all right, I'm going to do, and as far as you had Bitcoin in there too. So like, yeah, I'm buying Bitcoin, but I'm buying like Bitcoin. I'm not buying like some other thing that is a trust that tracks the underlying. Like I'm buying physical. I say physical. I'm buying Bitcoin, BTC, right? All right. This is gonna be my last question, and I'm gonna go ahead and kill the feed. And I'm having a live feed tomorrow night for people that are interested. It's gonna be at 10 p.m. Eastern. Um, I'll send out more information on my Twitter feed afterwards. So we're gonna do Square. Let me get it pulled up on my tool here. Okay. Oops, I gotta share my screen. And let me just share the comment so people can see the comment. This right here was the comment. Okay. Now let me share my screen. Okay. Here we go. Square just recently turned red. Let's see which was the date? March 12th. So this was way later than everything else because pretty much everything on our screener by like the 26th of February had turned red for like almost the entire market. Like the S&P 500, the Russell 2000, most of all these companies, they all turned red. So Square was really late to turning red. I think they're in a really unique position. And here's another thing that makes this one hard is like, look at the annual volatility on this, 41%. That's really volatile. Let me pull up over here. So I'll just walk you through how I would analyze a company real fast. So the first thing I do is I go across the top line of the company. So this is like all the money that they're bringing in the door before any of their expenses, right? So you got just an exploding income statement, like just exploding when you look at what they're doing. Um, these are like mini statements. If you click on them, they'll make them full screen. But just in general, so like for one share of Square, every year it makes $11 on its top line. Its bottom line is 88 cents for a margin of around 8%. Um, I wouldn't expect them to have a lot of free cash flow just because they're in a massive growing spurt. Let me just pop this up here to kind of see what that looks like. Yeah, so you can see their free cash flows are growing. The intrinsic value on this is much more of a growth pick. So when you're doing this, you would have to adjust for this trend, which adds a lot of risk into the projections, right? And there's a lot more that goes into this, but I think you're getting a reasonable market price of where it's at right now. That's similar to where the S&P 500 is with that 4.66. I think the S&P 500 is yielding 4.19. So if they're able to continue their current path, I'd say that the price today is reasonably priced. They have a lot of interesting things that they're doing in the crypto space, which I think is going to make them a way out in front compared to everybody else. Jack Dorsey's a flipping genius. Um, for the current conditions, I would tell you I actually like this company based on some of those pieces. Um, I think they're on solid ground. I think that they have a very clear vision of where transactions are going in the future, and I think that the fact that it's so easy to onboard new customers with an iPad or a smartphone or smart device or whatever for payments. Their challenge is going to be just the destruction that's being done on just across the whole small business sector. It's just going to be, man, it's going to be ugly, and it's going to be hard for them because that's going to be a ton of their top line. So like these numbers that you're seeing on their top line of 4.7 billion, like there's no way they're going to hit that top line in the coming year simply because of all the destruction you're seeing in the small business sector. So I think that's the concern moving forward. I think that those numbers, especially when you go back to this number and you're saying that that free cash flow is based a lot on that top line, you're going to have to lower that down. You'd have to put that down to like, down in here range. And then what does that give us? Yeah. Now your IRR is looking a little bit uglier. So I like the company a lot. I think they're going to struggle in the coming year or two, like everybody else. So, it's going to be a wild ride moving forward. Just another reason why I guess I just don't really have too much. I have no equity exposure. It's going to be a tough one. Let's see here. This is running a whole lot longer than I thought, and this is really fun to be able to pull the questions into the discussion. Uh, I'm just going to answer this one, and I'm going to be done. Okay. Do you know anything about any of Bitcoin's competitors? What competitors? I think Ethereum's a disaster. I don't think that they have. I think it's a Goldberg machine. I don't trust some of the key people in charge of it. Just my personal opinions. I think the code is a hot mess. Um, yeah, and I think that when you look at Ripple, I have huge concerns that it is not that it's centralized, right? That's what this is all about, right? The whole crypto thing is about decentralization and that nobody controls it. That's first and foremost. That's the only thing people are actually going to trust, believe it or not, which is very counterintuitive, especially if you looked at it years ago. Um, but I think the two major concerns I have with Ripple is A, it's not decentralized, so therefore not anything I want to consider. B, it lacks an incentive structure that drives the price higher. Bitcoin's incentive structure would take a very long time for me to go through all the nuances of it, right? But there's a reason it keeps going higher. And all these other coins are just like sucker fish sucking on the side of Bitcoin. And so if their price goes up, it's because the key drivers in the key game theory that makes Bitcoin go up is causing all those little sucker fish to get a piece of that. That's how I would that's the easiest way I can describe all these other coins relative to Bitcoin. So this is a protocol. If you want to study how protocols reach mass adoption and mass network effect, that's going to be a much better cue for you to understand why, in my humble opinion, Bitcoin is going to be the clear winner in the end of all this. All right. I think that's all I got. All right. If you guys enjoyed it, hit the like button, subscribe, all that stuff that people usually say at the end of these things. This was really fun for me to chat with some of y'all. I really enjoy the interactions that I have on Twitter. I really enjoy the interactions I have here on YouTube. It's just such a blessing. I really, really enjoy just working with everybody and putting some ideas out there. And I love when people share their opinions and their thoughts. Just a little tip: if you have bad form in the way that you argue, I've probably already blocked you. I just don't tolerate it. I just don't have time for it. I like to surround myself with people that are friendly, people that like to have fun, and people that have intense critical thinking skills. So if you have all those things, but you're kind of a jerk, and you comment on my Twitter feed, I will probably block you after just the first time. I don't mute and then block. I don't say, hey, cut it out. I don't do any of that. I just block you. And it's not because I want to create an echo chamber. Actually, quite the exact opposite. I want people to totally disagree with me. I just want them to do it in a kind manner, and I want them to do it in a nice way, in a productive way. Because I just like to surround myself with people that are similar to my own personality. And I like to think that that's how I am. And if I'm not, you need to call me out on it. So, all right. That was fun. You guys have a fantastic night, and thanks for joining me.